wonderful people with us. Big shots, we can say. First of all, shortly on stage, we will be joined by Jürgen Schaaf from the European Central Bank. Alongside Mr. Schaaf, we will also be welcoming Linardo Martinčević from the HNB, and we will be welcoming back as well Maghnus. We already just saw him on stage, right? Co-CEO of Cosmos Labs. Finally, last but not least, we will be also welcoming Ivan Vrdoljak. I've been practicing that name, coming from the Netherlands myself. And if the gentlemen are already around the stage, I would be very, very welcome to welcome them all on stage. Put your hands together, please. Be very, very welcome. I would invite a moderator to take this seat, if that is possible.
Thank you.
Please.
Yeah.
Thank you, gentlemen. So once again, Jürgen Schaaf from the European Central Bank, Linardo Martinčević from the HNB, Maghnus Mareneck, and indeed, last but not least, the moderator, Ivan Vrdoljak from Bloomberg Adria. Please be very, very welcome, gentlemen. Take it away, and thank you for being here.
Thank you very much. Thank you very much. Well, looks like even the euro is getting a software update, I would say, in maybe 2 or 3 years. Well, Europe is definitely, ladies and gentlemen, entering a new era of money. And as the European Central Bank moves closer to launching the digital euro, I would say a few questions arise on how this new form of currency will interact with blockchain innovation, with national regulations, and with public trust. And I think there are no better people than you to answer some of these or even all of these questions. So, Jürgen, let's start with you. The ECB has been exploring the digital euro for several years now. Last of what I've heard, 2028 was considered a reasonable timeline. Is it still the case?
Before I answer the question, let me thank you for being here. And in particular, it's important that someone from the ECB is here in Croatia with the first year of the full membership. Okay. And it's also to signal to the people from Croatia how happy we are that they are joined, and also to show the excellent cooperation that we have with the Central Bank of Croatia. And Linardo is an appreciated colleague. We've worked together for years. That's my first welcome word, and thank you. To your question, there have been a couple of dates ventilating in the public era. The issue that we have is we are not alone in this game. So we are working conceptually, we are working technically on this kind of project elements, but there's also the legislation. So there's a legal framework under development, and it's somehow stuck with the co-legislators in Europe. There's a bill by the European Commission that has been published 2 years ago, but we are still not there. We are expecting, I think, today, tomorrow, in the coming days, hours maybe, a report by the European Parliament that formulates their stance and on what they know, what we have in mind. After that, the Parliament and the ministers come together and define, fine-tune their stance. And our expectation is once they have agreed upon a legal stance, we will need another 2.5 or 3 years to be ready to issue.
Okay, so would you say it's going to happen prior 2030 or after 2030?
So based on this, so if the legislators come together and get their acts together and have something in May, June next year, adding our time to adjust to and calibrate to that legal framework of 2.5 or 3 years, 2029 is a realistic scenario.
Okay, from one central banker to another, Linardo, Maghnus will get to you in a heartbeat. How is the Croatian National Bank preparing from their point of view and different structure for the potential?
Yeah, thank you for that. I would just compliment what Jürgen said, and thanks for the invitation. It's really nice to be here. Yeah. As I could see, this is also a possibility for both your technological solution to maybe do some business with our technological solutions. Because in the end, what the digital euro is, for all those who doesn't know, it's a central bank digital currency project, which is run by Eurosystem. So it's the central bank digital currency, or it's a digital cash issued by the central bank, which is European Central Bank and national central banks. So it is going well. We are also part of this project. We have been there since we've joined the Eurozone. It is very important to have not only what we do at the Euro system for the digital euro to go live, we do the technical preparation, operational preparation, and we also do the macroeconomic economics. There is this part which is very important, which is also the political part. We need the political support because if we want a digital euro, and if once it arrives, then our idea is to have it as a legal tender. So this is where we need the political support. We need a law, and this is something what is really conditional upon, because we are waiting for the parliament to approve that law. If that law goes live in 2.5 or 3 years, we'll come to this technical solution, because the technical solutions are complicated, and we need partners there to develop it. We have a chance only, we are not allowed to make a mistake.
Okay, so it's basically 3.5 years from now. But
Yeah.
from a public standpoint, from a journalistic standpoint, from my standpoint, I don't see a whole lot of public communication from CNB to the public regarding digital euro. I'm not even sure, like, maybe 30% of people know what it is. You just explained it, right?
Digital cash, in a sense, well, you know, because sometimes people, you know, are confused. What is new there? Because we have all the solutions. But yeah, maybe you're right, because digitally, there's not that much that you could innovate. But at least in one aspect, the digital euro will be innovative, which is offline payment. So for the first time, you will have something, so device-to-device payment, which is, well, not known today, that goes live and that has a central bank behind it. So for at least, this is something what is new there, which is innovative. But for the rest, you could say it's the digital payment as well as everything else. But in the background, the one who supports that, and you know, where the trust and confidence is the central bank, because that's the issue of the money in the end.
Should we expect some kind of campaign from Croatian National Bank?
We do a lot of campaigns, you know, yeah, I hear you, you know, sometimes it's because I have a feeling I'm always somewhere out there at the conferences, my governor is there, but a lot of my colleagues are always somewhere at the television, at the radio, you know, and then in the end, someone says it's not enough. You're probably right, no problem, you're certainly right, because this is our perspective, and your perspective is like much better. And thank you for that. We will try to you know, I don't know, to do more.
Thank you, Linardo. Magnus, from an infrastructure standpoint, and I was listening to you prior to this panel discussion, how can the Cosmos ecosystem or any other blockchain ecosystem support interoperability between CBDCs like the digital euro and maybe other blockchain networks?
Yeah, I mean, I think there's a lot, and I think the truth is, blockchain is still, you know, we are still trying to understand exactly what we need to build to make sure that these projects actually see success, because you can't, like you said, we can't make mistakes, right? And I think blockchain technology in the past has been plagued by specific moments where it has made mistakes. And so, from my perspective, the things that make the most sense for any kind of central bank that wants to issue a currency that can be adopted by citizens is safety, right? This needs to be something where you can't have, let's say, bad actors take control of this currency or be able to issue the currency or use the currency. And so there's a lot of things that we're building around AML and KYC to make sure that whatever issuance platform is there can be correctly monitored. Yeah. The other thing that you need is interoperability, right? So when this currency is issued, it's not going to be very useful if it can't be used for cross-border payments, if it can't be used for, you know, let's say treasuries, and to create sort of debt vehicles around the currency. And what we're really excited about in the different CBDC pilots that we're building right now is how active and how exciting it is to work with the central banks so that they can say, oh my God, we can issue a treasury on this thing. You know, this is incredible, and we can make it accessible to anyone. And then also, we can interoperate our entire system with our partner country that we like, right? Whether they're using the same currency or whether they're using a different currency. This is especially true in, let's say, take the, like the different Caribbean islands, right? There's over 100 different currencies between those different islands. Crazy, right? And a lot of them are interested in the whole CBDC movement because they know that it's very challenging for tourists to figure out, okay, why do I need to hold all these different currencies, and to have faith that individual currencies are actually going to appreciate. And so the idea with putting blockchain behind that is, okay, we can make it very simple to interoperate between all of these. You have FX rates that don't require a bunch of third-party vendors that charge a lot of fees. And so we can make a much more easy-to-use system for the end user.
Well, Jürgen, I would say that Maghnus has big expectations of the digital euro. Will the ECB be able to fulfill them? And the treasuries, et cetera, et cetera?
Well, we have a clear mandate. Our mandate is to secure price stability, so take account of the solidity and creditworthiness of the money, the asset. The technology with which this is distributed to the people is of secondary importance. So our role is to ensure the absence of high inflation rates, take care of the assets. It doesn't matter so much if your banknote is printed on cotton, on paper, or on plastic. The underlying value, that's our job.
Yeah. Okay, but for an ordinary citizen, what would you emphasize as the most tangible advantage of digital euro versus standard digital payments via bank cards?
Your question is actually more tricky than you might be aware of, because the idea is to make the money less tangible. So we are transforming the quality of the asset of a banknote into the digital area. So a bit like we've seen that in other areas before, 100 years ago, 150 years ago, when you were listening to music. You had to go to a concert. At one point you had records and other ways of recording that, and you could listen to the music with the same quality, with a different means. Later, you had then cassettes, tapes, was more portable. The underlying quality of the music was not affected. It was easier to carry, to deal with. Then the quality increased because it became digital, and we had DVDs. Again, the underlying quality, the music, the concert was the same, but the easiness and the quality of how to distribute became better. And now we have the streaming services, and still the music stays the same. So in that sense, what we are going through now is we're going to provide public money, central bank money, to the people so that they can pay with a very safe and liquid asset. But the distribution changes because people are withdrawing when they pay from cash. And we need new ways. And what technology exactly that will be remains to be seen, but it has to be safe and solid. But again, the underlying idea is to protect the purchasing power of that asset.
What kind of technology should it be, Maghnus? What's your recommendation? What's the market's expectations?
That's a little bit of a setup question, obviously. But I mean, I think a lot of that is very true, right? I think one of the main issues with stablecoins today, which we're seeing, exponential increase in issuance, we're seeing multiple billions and now trillions of dollars of transaction volume in stablecoins. One of the main issues is these are not backed, right? These are not backed by an entity that at the end of the day is responsible for, as you said, the value of the currency, right? The system in which the underlying collateral is backed, but the system in which the stablecoin and the collateral are connected one-to-one is not the responsibility of a government, right? And is not the responsibility in the US of the FDIC. And so this creates a huge risk factor if we were to see massive adoption of stablecoins, because if this were to collapse, or there were to be a hack, or there were to be a drain of the underlying collateral, and the value of the stablecoin is trading underneath one of the underlying collateral asset, you could see a new kind of risk factor across global finance.
And a new crisis. Maybe
Yeah.
even a lot bigger than the one in 2008, right?
That's right. I mean, we personally saw the impact of this in 2022, right, with Terra Luna, where we lost $40 billion of capitalization of the UST asset. This sent, BlockFi under, FTX under 3 hours capital. You saw, over $10 billion in liquidations in a matter of days. And this is not something that we want to repeat at the global scale, right? Okay. And so I think from my perspective, the most important thing is that we have the involvement of central banks, and we have the involvement of the best technology providers out there to ensure that when people are using these currencies, they feel like they're using a real dollar or a real euro or whatever the currency is underneath it. And so what our job is as technology providers in the blockchain space is to make the technology legible enough to the central banks, to the regulators, so that they understand the risk factors, they understand how it works. It's not hype or narrative, it's something that is a real technology platform, and that they can deeply integrate into their existing systems, even if they're legacy, so that they can understand where this money's going, how they can make sure that it's safe, and how they can make sure that it's backed one-to-one.
Okay, thank you. Yeah, sure, Linardo.
Before you ask questions, just to complement on what both colleagues said, yeah, it is, to make this, to use this analogy, you know, it is that music that has to play still, you know, but now we're living in a digitalized world. What I want to say, so back then, like a few years ago, we had in Croatia ATM runs. We had the cash runs when COVID hit. So why is that so? Because this is where the trust of the people is. This is where the creditworthiness is. They wanted to have their money because that's the most secure money that they could find, most liquid ones. So in a world of digitalization, growing digitalization, well, it is less used. Then we had huge operational and logistical requirements to fill all those ATMs so that people are safe, that they can withdraw their money, that they are safe, nothing wrong is going on, and to preserve the stability of the financial system. Not only this money, but all other monies that circle around. So this is our role, and this is the role we want to transfer also to this digitalized world, to offer this digital version of cash, so they have also opportunity to take in case anything, because when everything goes good, everything's good, all the money is good. But when things are bad, then you can see where the creditworthiness is. So I think, just to complement this, I think this is what our role is in this digitalized world.
Share of digital payments in total payments in Croatia is around 50%, am I right?
Cash is still
king.
widely used, the king. I mean, in terms of number of transactions, we are like now at almost a little higher than 2/3, like 67. So the cash is less than that. In terms of quantity, it's 50-50, something
okay.
like that. So, but we are not, like, we are outlier in the Eurozone. Austria, I would say maybe Germany even, but the rest of the Eurozone is less than 50%, as you pointed out. Yes, you're right.
But we can say that our fintech landscape is growing. Digital payments are becoming more and more strong. What opportunities or challenges maybe do you foresee for local innovators when the digital euro hits ground? There are a lot of opportunities there. There are always the tenders. There are always procurements from the euro system to call for experts to join the euro system or to join the digital euro project. I usually broadcast it via social networks just to invite them. Many people came to me, and then they contacted the euro system back again. So I think there are, a lot of opportunities. We are doing the technological preparation, but not in a full sense, because, as Jürgen said, we are waiting for the legislative proposal, and then we will go full power. But still, I think, the opportunities are huge, and it's an expensive project, of course, at the beginning. Jürgen, what would you say is the biggest regulatory challenge in implementing the digital euro?
The regulatory challenge, or
the biggest one, regulatory?
Well, we are offering the money, and this cannot be in a legal vacuum, so the regulators or the legislators have to come up first without interfering with the independence of the central bank. So you have to strike a balance. At the same time, there are areas that are concerned which are not traditionally the role of the central bank, like AML legislation, KYC. So we take account, we make sure that the money is safe, but we are not prosecutors, we are not the police. The level of the cap on payments in cash, for example, it's not decided by us. So to strike a balance there, that there will be a solid legislation for the people that doesn't interfere with our role of making monetary policy, that's most important. And then we have to, but that comes in bigger campaigns later. We have to convince the normal citizens of the quality of this, of the usefulness of this. So we said we are, roughly 3 years away from potential issuance. It's a long time. If you would start now a full-fledged campaign, you make everybody nervous. People hear it on the sidelines of talks, then they run to the banks and want to have it. I want to have,
Yeah.
I heard this. So if we do too much now, we might do more harm than good. But at one point, we will have big communication campaigns going in the remotest corners of the euro area.
When you say more harm than good, there is some criticism involved regarding especially that part. Like, how will the CBDC or the digital euro strengthen rather than additionally fragment the eurozone monetary market?
So there are different layers why we are doing this. There are different dimensions of the intention why we think about this. One is that we see the trend, and the two of you mentioned that there's a withdrawal from the normal people and the retailers and the groceries from accepting cash to pay with. This is not driven by the central banks. It's a global phenomenon. It's not driven by the central banks. It's something that's happening. Now, we have to react to that because we are convinced that people need access to public money. Stablecoins are attaching their value, are pegging to public money. I don't like the word fiat, so that's why I say public money. Now, that's one dimension. The other dimension is for private monies, private means of payments, we see already there are very comfortable ways, easy ways to pay, credit cards, other solutions, online payment and the like. These are private ways to pay, and in fact, economically, these are liabilities of private entities, so it's economically different.
But
now,
critics would say this is the way of ending cash payments, right?
Wait.
And follow every payment.
It's happening. There are two things now. The motivation to come into this electronic way of paying is that from a European perspective, all those major players in the electronic universe are non-European by nature. So, and we have made some experience with public goods, sometimes even not even public goods, if you are depending too much on external providers. It may be cough syrup for kids, which we at one point didn't have enough. We saw it with the provision of gas, cheap energy, where some countries were relying too much on particular suppliers. So there are critical infrastructures, and money is definitely one big thing. So what we want to make sure, if there's a trend of withdrawal of cash in the way people pay, that they should have access to public money, even electronically. Having said that, we will continue to offer and further develop cash. So we are preparing a new series of banknotes, so there's no intention from our side to abandon cash. But we have to face what is happening, and the trend, as you mentioned, is quite clear.
But how do you think the total payments pie will look in like 15 or 20 years? Will cash still be the king or not?
It will be a place with many players. Like now, sometimes it seems to be hard to imagine, but when you pay without using electronic means, you have different notes. You have 20 denomination, 5, 50, you name it.
No more 500s, right?
They are still in circulation. And
I rarely see it.
You didn't see them before we stopped issuing them. So you even have coins.
Yeah.
Croatia can make its own coin. So one side of the coin is Croatian, the other is European.
Yes.
So there's plenty of room. And there's sort of a competition, not among the public materializations of money, but there's plenty of room for regulated players. So there's no intention to crowd out public providers of money, but there is the intention to increase the resilience of the payment system in Europe.
Linardo, how do you see the payments landscape in a decade or more?
It's really hard to say, but I think the cash will be there still, at least for the Eurozone, because as we already mentioned, apart from the digital euro legislation, there is also the cash legislation. So we want to preserve cash as a means of payment, so there will be a role for cash. At least I speak to a lot of people about all of us here, all the participants here are much more digitalized. They want to see the digital, whereas nothing anymore in the cash. But I think there is always the demand for cash. It will still be there. What will happen in the digitalized world, we will see. But I think still, in a decade, there still is a role for a cash. That's just, yeah.
And how does the MiCA regulation shape this part of advancements in Europe digital payment space?
MiCA, the Markets in Crypto Assets regulation, is totally, CBDC is totally out of scope.
Okay.
And DeFi is also totally out of scope. What we do here are the stable coins and the other parts, utility coins or something. So this is left for something else. I think that DeFi, by definition, is like, you know, the real DeFi. You know, it's kind of, we look at it, okay, we don't want to go there, because when you take a look from the regulatory perspective, if there's no liable entity, no regulation. Who are you going to blame if something goes wrong? So when you take a look at this, so this is why these sort of a real DeFi are out of scope. So this is how MiCA looks at it.
Magnus, listening to all of this, what will be the milestone in implementing digital euro? What will be the hardest part, considering everything we've heard today?
So I think just listening to you guys talk, one of the things that's very clear to me is there is a disconnect to some degree between what the central bank is trying to do, what private company is trying to do, and what the user is trying to do, right? The user is I think, mainly optimizing for efficiency in terms of just how easy it is to transact these things, and safety and sort of assurance of making sure that they have what they need. I actually view that as very closely aligned with what the central banks, from what I've heard, are trying to do. And I think the big question is, well, there's all of these private players in the middle, right? There's fintechs, Revolut, et cetera. There's the different payment card providers like MasterCard, Visa, et cetera. There's all the different lending systems, et cetera. The question is, what would it look like to create a very close relationship between the user and the central bank via a digital euro, right? And how could you create that direct relationship so that users feel like they can entrust a version of a currency that has the same kind of efficiency and UX that they're used to? And I think, in my perspective, that's really where distributed ledger technology or blockchain can be effective, because it enables a trustless system that can be run and governed by the central bank, and has already built into it the technology rails to directly interact with users, right, as they use stablecoins today.
Jürgen, final thought and maybe an answer to Magnus' question and concerns.
There's a big difference in the way most people judge a central bank and in a non-trusted exchange of means. So the blockchain technology is extremely strong in terms of overcoming the doubts when you don't know each other and there's no trusted third party. The central bank is the opposite of that. People go to the central bank because they trust them. It might not apply to everybody here in the room for whatever reasons, but the central bank is the most trusted player in the economic ecosystem. When there's a financial crisis, people go to banks and transform their bank accounts into cash, the liability of the central bank. Stablecoins, in their current assessment, have become the new hot talk because they are pegged to central bank money, different from the unbacked crypto assets. So the value that central bank and central bank money provides is that it materializes, that it signals trust. People go there because of trust. So the need for technology that can do without trust is not so strong than in the crypto universe.
Thank you, Jürgen. Thank you, Magnus. Thank you, Linardo. Unfortunately, our time is up. The topic is really wide, but valuable. Thank you, guys, for being here with us. And this was our talk about digital euro. Thank you. Thank you. Thank you.